following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from optionpit.com, Mike Tusaw from knowyouroptionsinc.com, and John Grigas from Options Express.
Welcome back to the Option Block, and I hope all of our listeners out there are having a very active and successful trading week. I am Mark Longo. I am your host for this rabid roundtable through the world of options. I am joined, as usual, by this colorful cast of characters, and we actually have an extra addition to the panel today. So I'm going to start with him. He gets pride of place today. He is Jim Luther, and he is actually our first politician on the show, you could say. He is a state senator from the great state of New Hampshire. So, Jim, welcome to the show. Why don't you tell us a little bit about what it is that you're doing here on an options trading show like this?
Yeah. Well, I'm a fairly new, I've been trading, equities for years, but I really picked up doing options about really after the crash. And I said, I got to sort of re-engineer myself, and got involved with Options Express, and then got connected with Mike Tusaw, and then he reeled me in with you guys. So here we are,
You have Mike to blame for introducing.
Yeah, he's totally at fault. So
now, are you a Buffalo Bills fan? Is my question would be my next question.
Because when he was with them, you mean?
Well, yeah. He had a profound effect on the organization. My understanding is half the reason they're moving to Toronto was Tusaw's doing.
Yeah, those seven preseason snaps that I took really did have
Yeah. No, to be honest with you, I don't miss. I actually went to school in Syracuse, so I don't really miss those winters. Sort of the Syracuse to Buffalo corridor. Mm-hmm. So I like to have, even though we're getting hammered here in New England, it's. I don't miss that part of the country, frankly.
And I think Jim can provide some interesting balance to the panel today. He provides that retail perspective of someone who's kind of come up through the ranks of starting with equities and then moved on to basic options and then some more advanced things. And I'm sure that mirrors the path of a lot of our listeners. I'm sure you could provide some insight and ask some questions that a lot of the people out there who are listening to the show might have going through their heads as well. Our regular listeners recognize the rest of the voices we have chattering in the background there, starting off with Uncle Mike himself, Uncle Mike Tusaw from Know Your Options Inc. Uncle Mike, how are you doing today? I'm not going to mention CSCO till the trading blocks. You don't have to worry about that. You don't have to be too depressed right off the bat.
Not depressed. It's an opportunity day. So with that, excited to be here as always, and just trying to stay warm here in the Chicago area.
And we are also joined in the rotating Options Express seat by Big Rob Kurzakowski. Mr. Kurzakowski, how are you doing today? How's your week going?
Doing good. Like Mike, I'm trying to thaw out here in the office. -8 when I left the house this morning.
Yeah, that people were saying that to me, that this morning the commute in was just atrocious. -8, -10. Not exactly the day you want to be rambling about through Chicago.
Yeah, and traffic was really bad for some reason today, too, I noticed. It was really weird.
All those cars froze on Lakeshore Drive again, probably.
Yeah, probably.
And that voice, listeners, last and only sometimes least, we have the greasy meatball himself, Mark Sebastian. Mr. Sebastian, how are you doing this week?
You know what? I couldn't be doing better. I had two things on my bucket list this week, One was to eat Thai food twice. The other was to speak to a New Hampshire delegate. And, 2 for 2.
You can die a happy man now.
Well, this week's bucket list. This week.
Oh, this week.
Next week bucket list is still yet to come. So
you prepare for death on a weekly basis.
Yes, some people have a life bucket list. Mine is a weekly bucket list. So, because I fully expect at any given time someone to get fed up with me and off me right there on the spot. So
you live a higher probability of death existence.
Exactly.
Life on the edge with Sebastian. That could be a whole new show. All right. I'm sure you're pretty happy about your Apple straddle, so we can discuss that. And since a lot of people here are Apple folks, you might as well roll right into the trading block.
The trading block.
And welcome to the trading block. This is the section of the show where we discuss what's going on in the markets today and what's caught our eye in today's activities. And it was an interesting mixed day on the street today. The S&P closed up about a point. The Dow closed down about 10.5. NASDAQ closed up a point, and the VIX cash up a meager 0.23. And we've discussed in the past the relevance of that VIX cash number. We no need to dive into it again, but it is at the very least a misleading indicator. But a lot of things were moving today. We're going to start off because I know Uncle Mike holds it so near and dear to his heart. We'll start off with good old Cisco. Their earnings, not exactly what people were hoping for. I know after they got crushed so badly the last time, a lot of people had taken some strong bullish sentiment on that stock. I know we've detailed on recent shows a lot of bullish options activity going on in Cisco. It's like those bulls kind of got it handed to them a little bit today. The stock closed down $3.12 or 14.2% to $18.92. So, Uncle Mike, I thought you were pretty safe with those 20 puts. Looks like those are coming into play now.
Yeah, they are. This is one to where, and just full disclosure for everybody listening, I have some clients that were short the February 20 puts. And this is one where we were at the 22 level yesterday, and this is why you need to be prepared for things like this to happen. With that in mind, I'm still bullish long-term on Cisco, and it wasn't so much the earnings that really brought them down, because if you look at what was going on yesterday right in the post-market trading, Cisco is still trading around the 20 level. What really helped it, or kind of added to the cause, so to speak, is that it just got hammered with downgrades today. Mm-hmm. And a lot of people, a lot of them went from like bullish downgrade. They went from being buy ratings to hold ratings. There was no one that really went, from what I could tell, and as I'm looking at this, there's no one that really went to a sell rating or a short this at all costs rating or anything like that. It just got downgraded from that standpoint, and a lot of them lowered their price targets from the year. There was one that actually lowered his price target from 25 to 24 over the course of the year. So the main thing wasn't really the earnings themselves. It was a lot of the downgrades that actually went into play on this. So,
Mike, I'm looking at the options here. I'm sorry. Did I totally interrupt you?
Yeah, but I'm used to it. Go ahead.
I'm looking at the options here, and I think that, and I'll get into this after you kind of finish your thought, but I'm looking at the options here, and for bulls, there's a lot of really interesting opportunities here, and I have to say I'm really excited to kind of hear what your thoughts are on what type of plays you might see in the options right now.
Well, a couple of things. Like right now, for the next couple of days, I'm going to just stick with the short puts because I think we are going to. I don't want to overreact too quickly to dive into anything. Cisco's a long-term holding for a lot of my clients, or it will be anyway if it gets put to us over the course of the next week at expiration. So a couple of things with which I'm thinking. Let's say that we bounce back up to the 1950 level and we get it put to us. I would probably just go and do some old-fashioned covered calls on it. If not, if the premium's not there, like it is with Apple right now, meaning if the volatility becomes low, like it is with Apple right now, probably get into doing some 1x2s, kind of like we're doing in the Apple world right now, which we talked about in our last show. and play it that way. I think that I still think that Cisco's a good stock to be in, and with everything that's going on with it, I think there's a lot of opportunities, and not only from just owning the stock, but by doing some of the ratio spreads as well. That's the other thing that I'm going to be looking into over the course of the next few days. And Cisco does weeklies as well, so that's another thing that could be there like it is with Apple.
Yeah, and if I remember your levels correctly, you're getting in around 1960. It's not exactly like you're getting a terrible price on Cisco.
Right. So, yeah, I mean, this is what trading's, for everyone listening out there, this is what trading's about. It's not about doubling your money over the course of a week and then retiring in 6 months like the infomercials promise. You got to be prepared when things go against you, and this is what trading's about, and this is what investing's about.
I have some Cisco activity here. I wasn't sure. We can talk about it now, or we can do it in the odd block, whatever you guys want to do.
I was looking at – I'm less concerned about the activity itself. I'm guessing you saw a ton of put sales and probably some small call buying. Is that kind of the majority of it?
Actually, we saw a lot of bears coming in. We saw put buying and call selling. Yeah, we saw the March 18s and the March 18 puts and the March 20 calls were pretty much leading the most actives for most of the day anyway. And we saw about 28,000 of the puts go up with 80% lifting offers. That was in like the first part of the day anyway. In the March 20, same thing with about 63% of those hitting bids. So people were actually scrambling to dump. I imagine these 28,000 are not closing out now. These are people who are putting on some downside in Cisco, which that actually surprised me. That's why I kind of wanted to note it. I wouldn't be an eager bear at Cisco at $19.
No. Well, one of the things I'm looking at, Mark, is you can put on the March 18-20 risk reversal where you're selling the 18 put, buying the 20 call. All right, it gives you basically a buck to the downside and a buck to the upside for a slight credit right now. By the time you cover your commission, basically for even, that's a nice little play. I actually kind of like that play. Another play I'm looking at for the bulls, okay, is you can actually do kind of the same thing even going out to April and June. Now, if I'm going out to April, I may want that credit. But it looks like, just kind of looking at volatility skew, it's got a real flat skew. So a lot of people playing it kind of either way. I like that as a risk reversal, though. I think either direction, if you're bearish, being able to buy put and sell call for even is a very, very, very nice opportunity. But for bulls, in lieu of those that maybe would put a collar on, like buy the stock, buy the put, sell the call, I think the risk reversal makes a lot more sense and involves a lot less cash outlay. What do you think, guys?
Yeah, these naked bears coming in and just loading up on the 18 puts, if I had to choose, if I was going to go one way or the other, I would definitely leg in with the risk reversal and take some of that premium off the table and some of the exposure there. I personally would like it the bullish way myself as well. I would be terrified of opening a bearish risk reversal on this right now in Cisco. It just doesn't seem to make a heck of a lot of sense just from what I know of the company and what they're doing. Plus, didn't the analysts get the note? I told you to, so I bought a flip camera. Didn't you get that out to the analysts?
Ah, shoot.
That alone should have driven it up about 2 points right there.
Darn it. Well, just to kind of expand a little bit on what Mark was saying, if you do a risk reversal like that, shorten the put, buying the call, if you get a little bit of upside movement, at some point you can buy to close the short put and then sell to open a short call, turn it into a bull call spread, and by doing that, you've created a dirt cheap bull call spread. It's sometimes even a cred if it works out well enough for you. So that's something to where I definitely think that's a choice and something to consider as well when doing risk reversals like that.
Yeah, I love that idea. That's a great idea, Mike, where you might.
I'll take the credit. That's fine.
Yeah, that's a great idea where you kind of pulling off when it goes your way and moving that out. I think that's a wonderful concept. I'm a fan.
The other big name we've been watching a lot today, and one we've discussed on the show quite a bit, and the one we brought Jim on specifically to address because he is such an expert in this name, is, of course, Apple. And Apple has just been all over the place today. When I logged on this morning, I think it was trading, 358, 359, somewhere in that range. It was all over the board today. And let's see, let me pull up the official high and low stats for the day here on Apple. Yeah, the high was hit 360 actually, and it got down to 348 today. So Jim, you must have had an interesting trading day today.
To be honest with you guys, today was my politician day. I was in committee hearings pretty much all day, so I didn't do any trading today. The way, and Mike and I were talking a little bit earlier, and I haven't even had a chance to see if there's any news, but I just sort of, my gut told me this is, buy on rumor, sell on news, with Apple, and, I don't know, and I saw the thing about Egypt. I don't know if there's any macro news out there, but, it's a high beta stock. So, a day like this doesn't really bother me too much unless I find some news that concerns me. So.
What does Uncle Mike have you trading in Apple these days? Do you just have equities? Do you have equities with options?
No, I'm all in options. To do a typical, call, have the equity and do a call, that's way too expensive. So I'm just doing, but I'm a bull. But, I have changed. Mike will tell you a few weeks ago, I really sensed the bearish trend and I went short for probably about 5 days and did just as well on the downside as the upside. So, I'm not a hopeless bull, on Apple. And, but I used to be just a straight fundamental guy. And I think Apple, has amazing fundamentals, and I'm sort of a tech guy. So I sort of have a sense of what is happening with the fundamentals around Apple. And, I just, I've been debating with the Apple bears for years. They just say it can't get any higher, it can't get any bigger. And certainly at some point it's going to reach a point. And then I have the debates with the people. Typically it's the Android versus Apple sort of mindset, the closed system versus the open system. And I said, hey, it just comes back to the user. There's not a religious discussion here. So,
but you've never really talked to a true Apple nut, have you then? I'll tell you.
Oh, I have.
John,
absolutely, I have. Yeah.
I wrote a quasi, you don't even call it, I guess it was negative, but just a piece saying that I thought it was a little rich. Yeah. And the comments I got back involved everything save the actual article that I'd written. It was, your mother can do this, your uncle can do this, go do this to yourself. It was really interesting.
I hear you. It's Apple attracts a very rabid following, and I just can't hang with those folks too long. I'm sorry. I do. I have a little bit of that in me, but I got to be a little rational about this. So it's, but yeah, I hear you. It certainly attracts. But, to be honest, and I think that's the power of branding. Apple has done an unbelievable job with branding. You look at just their relationship with the customer. Microsoft tried to mimic that, all these other companies. And, there's a thing about buzz. And Apple knows how to do it, and, other guys don't. So it's, even look for instance, with the first day of pre-sales on the iPhone. That blew away, and they sold out in the first 17 hours. Verizon, every iPhone they had, and that blew away any sales they had with Android, any of the Android phones, which a lot of people are excited about, but the numbers don't even come close to what Apple's numbers were. So, but I've got, as far as my positions, and I'll be honest with you guys, I am having a problem. I can't get onto the web here. I'm actually trying to do it through my iPhone to see my position.
There you go. That's your problem right there. Short the stock. We're done. We're done talking about Apple.
I'm on a MacBook Pro. I know. I'm a totally Mac weenie. I got my MacBook Pro, my iPad, my iPhone, and, that whole thing. But typically, I'll tell you what I do is I used to be much long, and I'm talking as a retail guy. You guys are getting much more into the technical stuff, but I'm a retail guy. I used to be as a novice, I used to be pretty long out there. Months, very long options. And talking to Mike, I'm pretty much just 1 month out. And I'm doing, really multi-legged stuff. I've got 3 different accounts that I've got Apple stuff in. So I'm typically doing, out of the money calls on the long side, and then I'll do a short, that maybe $10 above. I'll also do a downside put that I'm short on, and sometimes I'll do even one or two legs beyond that. So I'm really trying to be as close to zero on my cost for my transaction. So that's typically how I do things. Now, Mike, maybe you want to add, since I can't even see my screen. I know you've sort of modified my position with you a little bit.
Yeah, what we're doing right now with and I have different clients that have different levels of leverage with Apple, but what we're doing right now in Jim's account, kind of like to replace the Apple collars and covered calls, I'm just kind of using deep in the money calls. But to the upside, what we're doing, like right now, for example, because like what we were talking about a little bit on Monday with Apple, premium out there, it's not too expensive right now with Apple. I think that, or at least as of yesterday when we put some of these positions on, it's not extremely expensive. So instead of just selling a covered call to the upside to complete the collar, if that makes sense, what we're doing right now is we're long a March 365 call, and we're short 2 February 365 calls. And we actually paid a debit for that position. But if Apple goes to 365 over the course of the next week and a half, this is a wonderful problem to have. Should Apple stay the same between now and expiration Friday, then the February calls will expire worthless, and then we can do the same thing for the next week, and we'll probably adjust at some point before then. But just for theoretical purposes, we could sell the same amount of premium for the next week, and then by doing that, we will have then eliminated the cost of the March 365 calls, and then the week after that, we then have the wonderful choice, if that expires worthless again, of should we just let it ride and have free double leverage on Apple, or should we continue to sell premium? So right now, we're kind of doing an out-of-the-money monthly, weekly ratio spread on to the upside with the out-of-the-money calls in lieu of just selling premium on it, just because of the fact that something that moves this much that doesn't cost that much to buy the options on, it's really makes a lot of sense in our opinion at Know Your Options.
And Sebastian, how are you managing that 350 straddle you bought 1,000 times the other day?
350 is a 355.
355. Oh, okay.
Yeah, I've got some clients already out of it for over 10% in a couple of days. But personally, they're not my clients. They're people that are students of mine. I don't think client is probably the right word, but that kind of got into the Apple straddle after I pointed out that I thought the vol was low. And they, a couple emailed me and said, hey, I sold out at 21.80 today. I think this thing could go to 26, 27, 28 easy. 21.5% volatility in Apple is crazy low. From a long-term realized volatility perspective, that's lower than where it normally trades. Short-term, it's low. I mean, there's 1,000 reasons why this thing has to move around, up or down. How do you not – anytime that straddle with a month out gets below 20, especially with it trading up around 3 double, how do you not want to buy and hold that thing? I was also looking at that it might be actually a decent short time spread play, Mark, where you would buy the front month March and sell April or May against it. I noticed that April volatility was a lot higher than March. So for those that are a little squeamish about just straight up straddles, the short time spread might actually make more sense. So those are two things I'm looking at.
Apple's almost getting to the point where they need a mini Apple now. So many of our listeners, it's getting out of their range. They can do a one lot of straddles and things like that. It's funny.
Yeah, it's gotten so expensive. It's priced out a lot of the retail clients. previously in the middle part of last year when we saw the 275 level as kind of a ceiling where it was bouncing around there for a while. We had the clients that were buying the deep in the money, longer dated options and then selling calls, essentially using it as a covered call. Mm-hmm. And it's gotten pretty rich, but it's also, we've seen it take off since September, and that's also one of the reasons why you have to really, as a trader, adapt quickly, because all of a sudden you're getting yourself either a sign on that short leg, and then you have to take action and maybe exit your long position, and I think that's certainly something that I think a lot of traders miss is the volatility skews on stocks and not paying attention to that maybe as much going into earnings. Going into the last earnings, I've never seen Apple's volatility that low going into an earnings announcement. And Mark, I know you're all about vol and volatility, and I think that's something that a lot of traders we get the people getting into these various positions going into an earnings announcement, and just being naked. And I think that's actually this past earnings announcement with Apple, that was actually probably a good play in getting into a naked position, because you're not buying that much of the volatility premium. Other times, sometimes
it's like a disaster. Yeah.
It's doing a bull call spread or a bear put spread is a better way to go, because even if you're right, sometimes your long leg doesn't move as much as it should in theory, because the volatility just kind of drops off. You make up for it on that short option deteriorating pretty quickly.
I like to tell my students this. It's great to be naked when you're in the shower or when you have the house to yourself for maybe a day or two, but not into an earnings play. That's what I always like to say.
So Jim, real quick before we move, real quick before we move on into other topics, as such an Apple devotee and some guy who follows the fundamentals a lot, what are your opinions here, and how are you positioning going forward, do you think, with all this furor over jobs and the lack of a succession plan? You're still very bullish going out a couple of years with Apple if he's no longer at the helm?
No, I don't trade that far out. There's too many unknowns. But I would say that I think that, with the events in the last few weeks, I think the market has shown that jobs is not as critical to the picture. Now, I will say that for the short and medium term. The long term, that's a different story, because there may be some visionary components that his bench can't pick up. But I do think if you look at his team, Cookson and all the others, that their execution is just unbelievable, and there's a lot of products in the pipeline. I mean, we're going to have the new iPad 2 out, in end of March with the camera and double processor. We're going to have the next iPhone out this summer. It's and then there's I know they're working on some sort of TV thing. They got to, and those are big deals, but I'm not like I was maybe, a year and a half ago. I'm definitely, I'm looking at this typically on a week out sort of window, because, stuff can change. And I think there's always macro risks. There's a lot of uncertainty, Middle East and stuff like that shakes the market. But I think the fundamentals overall, I think, are great. I think that the people I talk to, my peers, are just, I see people picking up iPhones, picking up iPads. They've never been an Apple customer before. That just reinforces to me that their penetration, again, if you look at it, if you look in the computer space, they've got about a 5% share. So, them getting Verizon was critical. And I wish they had gotten them sooner, because that gave a window for Android. But if you look at their penetration overseas, it's still fairly small in some markets. They've got a lot of upside, in a lot of markets that they can grow in. So, people can say the market cap is huge. Yes, but from a fundamental perspective, I think they've still got a lot more opportunities.
When people talk about the succession plan, they've pretty much stated that their product line for 2011 going into 2012 is already set, and I think that's where Steve Jobs is an innovator, and they already have a very good marketing department. Again, they've kind of built up that client base. People, I've talked to, this is coming from an Android person, very hardcore Apple fans, and they market it as, they innovated this and they created this, and it may be a feature that was already out there, but it's being able to put that out and make it a public belief that makes Apple so successful. That and it's they make their products extremely user friendly. So I think that in the going through the end of the year, the prospects for Apple are still very good.
Well, let me just make a point. And I think people do raise this risk a lot. I'll tell you where I'm putting my bet. I think because I've seen some of the bios and I've seen some of the interviews with their bench, and he's got a team that is incredibly obsessive, like he is. And these guys, you look at some of these guys, like the guy who was the original iPod guy, and these guys, they're brilliant. And I do think that he has passed. That's sort of the comment that I make to folks is he's passed his genes on to his team. Now, I think there are some pieces that can't be replaced, but I'm a little more optimistic than some folks that, the window is only a year to 18 months. I think that this team can go quite a bit longer than that. Long term, I don't know, but that would be my 5 cents.
See, I think they're making some kind of really silly mistakes is my one issue with Apple. Not being willing to work with Adobe is just nonsensical to me. I don't get it.
That's a issue. That's a validity for him.
It's ridiculous. And Apple TV is probably going to be their first thing that doesn't work. And let's not forget that in 1987, everybody had an Apple IIe, and very shortly after that, everybody had a PC for a period of time. There's a lot of people that think that the iPad's going to be a profound innovation. Well, you know what, the iPad technology might be, but if I'm a major corporation that is PC-based, do I want to kind of migrate my entire corporation to Apple, or do I want to grab something like Samsung that already works with Windows and already works with Google technology, whichever one's on? Is the iPad going to be the thing, or is it our Apple IIe? People don't realize it that Apple has had another period of time where it was a high flyer that could do no wrong. Personally, I was 6 at the time, but there's a lot of people that seem to forget that.
Yeah, no, I hear you. I will say it's interesting. I bought the iPad on day one, and I knew Rev 1.0 was going to be an amazing product. I just had that gut feeling, and I think that people, and I had many people ask me, why would you ever use this thing? I got a cell phone, I got a laptop, and it was like, well, you don't get it. If you're asking that question, you don't get it. And the issue is they have an ecospace around the iPad. The Galaxy is, I don't think, a workable form factor. And that version of Android is a disaster. The other, and I think we'll see how the next one comes out, but I think Android has some real work to do to really make that operating system a solid touch-based operating system. The other issue is Apple is the only company, as far as I know, that is building their own chips internally. Other folks have to go outside. Apple has locked up the consumer stream for a lot of these touch screens. They've basically, the manufacturers Apple said, hey, they got us locked up for the next 6 to 9 months. So there's a real issue there. And if you look at like Fox's deal, you've got a lot of apps out there, and there's going to be other systems. But when you have a time window like this on a product, and I don't think the Galaxy is a credible, competitor. Maybe something down the road. I don't think the form factor is going to work though.
Yeah, if there has been some recent genius at Apple, aside from their UI, which no one would argue it has been their major value added in this space, but it's their supply chain management and their production management. Like you said, Jim, they have locked down key components that not only make it easier for them to produce large quantities of their devices, but make it almost impossible for some of their competitors to dive into the same space because key components are simply unavailable to them. There's only a finite number of these certain small parts and these certain rare elements they need to make these components, and Apple has the monopoly on a lot of them. So that's what's really, people always ask what's taking so long for other competitors to catch up with the iPhone and the iPad. Part of it is that Apple has locked down that supply chain so well, and that's been probably one of their key competitive innovations for them.
Right, and the other thing is, folks are saying, well, the problem with the iPad is it doesn't have a SIM card slot, it doesn't have a USB slot, it doesn't have all of this. Well, for corporate IT, that is a beautiful thing because they can lock that device down. So the security around that is amazing, and that's what a lot of corporations are looking at. They're building their own iTunes store, in essence. I mean, it's sort of a funny name for that company. So you as an employee of XYZ Corporation, when they give you that iPad, you can't play with it. You can't add your own stuff. You can't do anything with it. IT loves that. So, and the issue with it not working with a PC, well, you can use iTunes on the PC. You can do all of that. Maybe you don't have all the syncing on the calendar issues, but so many people I know are picking up iPads for the first time, and they don't even Galaxy, they've never even heard of it. I mean, it's a window. I mean, they've been out there, but here we're coming up on a year. We're coming up on a year in a new product where they don't have any credible competition. You've got a critical mass in that ecospace. That's going to be tougher and tougher to challenge.
Well, Jim, we've been talking a lot about Apple. It's fascinating. I think we can do the whole, people here can do the whole show. I'm sure a lot of our listeners were happy to have some Apple bulls in the ranks to offset me and Mr. Sebastian, who continually poo-poo the long-term prospects.
I'm not an Apple hater. I'm just not an Apple lover, which it's like you have to be.
It's either or with them. You can't be both.
I know.
It's like being a little bit pregnant, Sebastian. You are or you aren't.
If you go into the coffee shop with your MacBook and you say you only mildly like Apple, they'll just throw you out. You have no place there.
It's like telling an officer, I was only a little drunk.
Jim, I'm glad you can make it on.
Great to be with you guys.
We accomplished a significant thing. We brought a state senator on the show, and we didn't dive into partisan politics once.
Well, I'll tell you one last thing, and this is just so you have an idea. One of the things we're looking at, and other legislatures are looking at, is actually replacing all our paper with iPads. And if you look at the amount of money that is spent on paper in many of these environments, it is hundreds of thousands of dollars a month. And you think about bringing a few iPads, that's a huge deal. So we're looking at that, and I'm the one who's pushing that here at the state senate. So we'll see where that goes.
Oh, there we go. Some of them Apple needs to call your committee to get that stuff moving. They could.
Oh, I'm talking to them already.
I'm actually having my Samsung people call one of the guys on the committee of the other party to push the Galaxy.
The only problem is I'll have to scroll a lot more on the Galaxy.
HP has the new one that was announced yesterday. There's the RIM one. There's some other players in the mix finally.
Yeah, and I want to see those products. I've seen the Galaxy. It's the only one out there. I can't wait to see these other products where I can touch them. So we'll see.
Well, Jim, thanks for coming on to this extended edition of the Trading Block, but I'm sure a lot of our listeners loved the discussions we put in there. And with that, we're going to close out the old Trading Block and roll into an abbreviated odd block.
The Odd Block.
And welcome welcome to the Odd Block. This is the section of the show where we discuss some interesting or unusual activity that we're seeing on the tape today. And today is going to be an abbreviated one because we had such a long trading block, and also because we already hit some of the activity we talked about with CSCO and a few others. One of the ones I think maybe I'll just condense this down to a few. We could save some of the other ones we've seen, but one of the ones that actually occurred. We tape these shows, if our listeners haven't figured it out yet, we tape these shows on Mondays and Thursdays for release on Tuesday and Friday. And one of the things that actually occurred between our shows was kind of interesting, some activity we saw yesterday that I wanted to bring up again. It was some bullish activity in a little name, Tenet Healthcare Corporation, that's THC. And this name closed at $6.96, up 9 cents. This is the name that does usually about 4,000 contracts a day. They did 14,000 yesterday. And they're done about, let's see what they did today, and about 11,000 today. So the activity is still going. This is the name that has some M&A activity going on for the past 6 months. And all of a sudden we're seeing an explosion of bullish activity in these March 7 calls. We saw 5,000 go up in about 2 minutes on Wednesday for about 20 cents. Over 10,000 total went up on the day. This is the name, like I said, does little to no volume. And all of a sudden we see an explosion of bullish near-term upside activity. Today we're seeing another 4,000 going up. The bulk of them buys. Actually, no, I'm sorry. That number has been adjusted to another 10,000 of these March 7s have traded today on prices around 25 cents. You know, we've discussed this in the past a bit, and this is a little name with a lot of M&A activity, and they have had some recent deals and offers to the company that they've been fighting internally, and now all of a sudden we see an explosion of very suspicious, very near-term bullish activity. And this is one that I think our listeners should just keep an eye on, and this is the kind of thing I wanted to illuminate too, because this is just this stinks to high heaven of an insider who thinks he knows something about this stock and is positioning for a near-term pop. These kind of trades would go up in the past in the darkness, 10 years ago or so. We see things go up all the time and no one would comment on them. It was a much easier environment in which to get these sorts of things done, and the insiders love to play in the options market because of that. There's very little oversight on them. And in these days, with the exchanges monitoring these things, especially cross-exchange activity, it is easier to flag this type of activity. So hopefully someone has indeed flagged it, and if we do see a massive pop in the stock over the next few weeks, it's definitely something that I think we'll be seeing some digging into. But anyway, I wanted to bring that one up because that's probably the most unusual of the names we saw over the past few days. Something interesting to note. And Sebastian, you're leaning on the non-shady side?
I'm leaning on the shady side, but
always lean on the shady side.
Always lean on the shady side of life.
I thought we had the voice of the angels there for a minute. Everyone's feeling shady on this one. So anyway, I wanted to bring that up to our listeners' attention in this quick abbreviated edition of the Odd Block. And with that, we'll close out the Odd Block and roll right into the old Express Block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome to the Express Block. This is the section of the show where Rob takes us on an exciting journey through the world of Options Express. And Rob, where are you going to take us today?
Well, lately we've had a lot more commodity trading going on. It's been we've seen our volumes definitely come up quite a bit, especially in crude oil. We're now with the Egyptian crisis at least not worsening and probably coming to an end sooner rather than later. We see the March crude oil contract just kind of sitting there at the 100-day moving average. We've seen a lot of intraday and short-term trading, and some surprisingly bearish plays in some of the oil ETFs. People expecting the market to come back down a little bit. Also the notes and bonds. We've seen a little bit more activity. Traders hoping that the bond market's finally found the bottom. Also, some of that is spilled over to TLT and some of the bond ETFs. The foreign central banks, especially out of Europe, have shown surprising demand for U.S. debt, which is kind of surprising given the amount that we've written in the last few years. We actually had the strongest demand we've had in notes in the 10-year note auction since 2003, I believe. Yesterday, so notes and bonds got a little bit of a pop, coming off of that, but it's tough to see that market just kind of sharply turning around unless the economy just kind of bottoms out. Other than the excitement we had in Apple there for a while, I think there were some rumors that maybe Steve Jobs' health was taking a turn for the worse. We're quickly abated, and the stock kind of stabilized. So other than that short flurry of activity, it's. I don't know if the market the equity market is coming up to correction levels, but we're not seeing the type of position building that we've seen in certain stocks. The activity seems to be really scattered, and it seems to be very mixed. We're also seeing some of the short option strategies, the box spreads, and reversals and reverse conversions, and some of those more just kind of those strategies that capitalize on those put premiums coming in lately. So the put side is getting a little bit heavy when you're looking across the board as far as put premiums. Maybe not the activity, but the premiums are certainly getting there. But we've had just a kind of a wild mix of trading strategies, and we haven't seen any one type of strategy or one equity really being prominent. People are just kind of picking and choosing their spots.
So there's no clear consensus then from the OX community that they're positioning, and maybe in a macro sense, that they're positioning for a near-term pullback in the markets, or they're bullish or anything like that. They're kind of just all over the board.
Yeah, I mean, we're seeing volatility plays. We're seeing traders, a lot of non-directional trades or hedging or kind of tweaking of positions, but we're not seeing any type of consensus as far as what the OX community is thinking is going to happen in the next week, in the coming weeks or months.
It's funny you mentioned the Steve Jobs health rumors, because it reminds me of when I was standing in the SPX in the late 90s, and we had the same thing going on, only with Yeltsin. Every other day there was a rumor, Yeltsin's dead. This time he's really dead. Yeltsin? Yeah. Yeah, Boris Yeltsin. As opposed to, you thinking Yakov Smirnov or something like that?
I love that, Boris Yeltsin.
But, every other day is, my guy on the desk in New York says this time he's really dead, and the S&Ps would sell off. And it was a regular driver of activity. Now it looks like they replaced Yeltsin with Steve Jobs, and he's the new "it's dead" rumor. That'll play out well for your straddle there, Sebastian.
Sebastian's dead is going to be the next rumor that drives the market.
He dies on a weekly basis. You kidding me? The man plans for his death every week.
Well, you should get into the weekly option trades and plan them expiring worthless. Maybe that's why the weeklies are getting so popular now.
I should just go out and what I should go out and do? I should just enter like a 2015 box trade and then take the money and run. What do you think?
Maybe you shouldn't say that with some brokers listening and other people listening.
Oh, don't.
What's that, Rob? You're closing out Mark's account there? How did that happen? All right, and with that note of silliness, we'll close out the old Express block and roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is the section of the show where we discuss what's on our horizon for the next few sessions. And one of the things I wanted to talk about, just kind of interesting, a lot of news actually happened in between these last shows we just did. And for us, what we're watching has been a lot of activity in the exchange space and what that means going forward. For our listeners who maybe aren't as privy to the inside baseball stuff going on in the exchange space, but there are some rumors, and apparently there are relatively advanced talks going on between NYSE Group and Deutsche Börse, who, of course, run a lot of the European exchanges, and a lot of the European equity and futures volume go through them. And for the option side, what that would mean is that ISE, Amex, and NYSE ARC options are all under one roof, so you could take a pick as which of those exchanges would kind of be the odd man out in that group. But it was interesting for us. Of course, some stocks have been moving on it quite a bit as a result. We saw CBOE pop today, and that's kind of raised the question for us. Everyone who's traded CBOE, myself included, has always viewed it as not so much as a fundamental play, but as kind of a long-term call option on some sort of M&A event, whether it's CME buying them or someone else coming in and buying them. And those rumors are coming to a head again today. In fact, we just dumped some CBOE stock we had lying around that we had gotten assigned on months ago that we had just forgotten about in our portfolio. And he finally took the opportunity to get rid of it over 27 today, as opposed to 23 or 22, wherever it's been hovering for the last few months. But what do you guys feel about these renewed rumors? And, of course, look at the activity we saw today on CBOE. Bulls are coming out in force.
That type of rumor basically is going to force the Merck's hand in any kind of CBOE deal, I think. Right? Wouldn't you think that would almost force the Merck to make that move, or force the CBOE to solicit the Merck? One of the two.
I would think so. A lot of the articles I've been seeing coming across the wire, are pointing to the NASDAQ, but the CME makes the most logical choice because their exposure is in derivatives, is on the future side, and they have no equity exposure. And I'm sure they would love to get into the equity game. And the CBOE is a logical choice. Just combine all the Chicago exchanges. I'll put them all under one roof.
I've been saying this for years, and it drives my friends at the CBOE and the CME crazy whenever I say it. But the CME is the only logical suitor in my sense. CME is a pie with a nice little wedge missing, and that wedge, the CBOE fits perfectly in that wedge. You look beyond a little bit of the SEC and regulatory hiccups that would happen with that deal, but in terms of product mix and everything else like that, CBOE and CME go together perfectly. NASDAQ, some of the other ones they've bandied about, NYSE, they don't fit as well there. There's a lot of redundancy. But in the CME, it makes a perfect amount of sense. And granted, CME currency isn't what it once was, and they've also gained some regulatory ire over their handling of the ELX guys and how they've been less than cooperative with the CFTC there. So they might have more regulatory review over a CBOE deal than they had in the past when they got NYMEX or even the Board of Trade. But I'm curious. I don't know if this is going to force their hand right now or not. I mean, if the
merger goes through.
Yeah, exactly. If these talks are as advanced as they say, then and I've been talking to some people, a variety of different people, and reporters are ringing us off the hook yesterday. What is going on with this deal? And from everything we've seen, it does seem to be relatively advanced.
That would be interesting. You gotta think, who's the loser in that deal? If my guess would be the American Stock Exchange, don't you think?
ISE is kind of half NYSE ARCA, half Amex. They have kind of some of the traditional volume and model coming in there. At the same time, they're competing with a hybrid maker-taker model. And this is all very inside baseball for our listeners, but I know a lot of our listeners like this stuff. And so I kind of see ISE actually being the odd man out in that.
But it seems, my understanding, brokers love that anonymity that the ISE offers that a lot of the other exchanges don't. Everybody I look at, every broker, as far as real volume goes, I know we've had this discussion in the past, but the ISE is still a big, big hitter when it comes to terms of real volume that takes place in equity options. And you're going to hear a lot more complaints from kind of the order flow provider community about the ISE disappearing than I think you would either the Amex or the NYSE. Don't you think?
ISE's benefits have not been exactly coming to their aid over the past couple of years in the market. They've lost a lot of business on the institutional side by not being able to compete effectively with crosses. So that business is going elsewhere to a lot of other exchanges who can cross more effectively. They've tried to petition and make a much easier cross order type, and that's been held up by the SEC and by the other exchanges who've objected to it. So I don't see them attracting a lot of institutional business these days, and it's migrating elsewhere to these exchanges that have sold percentages to order flow providers and to exchanges that have maker-taker deals and other things like that that are routing a lot of orders. So it'd be interesting to see how that shakes up, if Deutsche Börse would hold on to ISE or maybe spin it off and take the other two instead, or try to fit them all together. But that seems like a square peg going into a round hole. Well,
I mean, that might be, I mean, I don't know why you need all three of these, you know. I mean, in the regular world, why do these need to exist? So.
No, you don't need all three of these, exactly.
Yeah.
And that's the question that's going to confront whoever is the ultimate decision maker after this deal goes through. If it does, what do they do with that square peg in that round hole? And for options traders, you know, that comes down to one less venue possibly for them to execute through. Not that that's a big deal these days with so many other venues, but ISE was a market leader and an innovative leader for a long time in the equity options space, and to see them, who knows, potentially spun off of this deal or somehow forced into the other two, that would be interesting to see. I don't see all threre coexisting, though, under the banner. It's just it's almost moot and redundant.
Now, let me ask you guys. Let me throw this out here too. What about, like, how do you think the stock ICE is going to factor into this? Because they have been through the roof these last couple of days on these rumors as well.
Well, they might be the only one to try to make a play for the CBOE to vie with the CME, because they have a history with the CBOE. Remember, they came in and did that deal when the CME was trying to take over the CBOE, essentially with their with that seat deal with the Board of Trade exercise rights. And CBOE and ICE aligned themselves against the CME in that fight, and it was an interesting take. And because ICE actually launched a rival bid for the Board of Trade, for our listeners who don't know.
Yeah, I remember that.
It was a very interesting time and very interesting trading in those names at that time. And they were ultimately defeated, but CBOE threw their weight in with ICE in that fight. So that might also open the door for more cooperation between CBOE down the road, even though I don't think CBOE really fits very well with ICE.
No.
ICE is primarily OTC energy contracts.
Right.
Actually, the ISE and the ICE might actually make some sense. Don't you think?
Just because you like to say it the same way?
Then it'd be the ICE buys the ICE.
ICE and ICE.
Yeah, my wife would get way too excited if I said that in her presence. She'd be thinking she's getting diamonds. Yeah, hey.
If you say double ICE around Valentine's Day, you're out sleeping on the couch.
Yeah, I bought some ICE. My wife would be like, nice, and then she'd be really disappointed.
That's what we're watching on the old exchange front. That's going to be interesting to see the volume. CBOE volume was off the charts the last few days in the options. They closed around a little under 2687 today, up substantially from where they've been trading in recent months. And so it'll be interesting to see if these rumors and if these substantial bulls coming into CBOE options are going to play out. That's what we're watching in the near term for the next few sessions. What are you guys watching, and maybe aside from the exchange stocks?
Well, I just wanted to kind of add something to that exchange, the CME CBOE, and how great of a fit that would be, because you have the majority of futures contracts traded in the U.S. are traded at the CME, and the CBOE with the portfolio margining, and that they're trying to get cross margining between equity and futures products, and I think that would take a huge step forward in getting that accomplished. Obviously, there's I mean, you're going to have regulatory, you're going to have the CFTC and SEC kind of it would still kind of fight it out, because the CFTC would is worried about just basically becoming another branch of the SEC at that point. But it makes absolute sense, and with the institutional clients, for the more sophisticated trader, it gives them more leverage that allows them to trade more. So it makes the ICE and CBOE makes, you have an exchange where, so you have the London, the old London Petroleum Exchange or International Petroleum Exchange, products there, but a lot of their volume comes from the sugar and cocoa and cottons of the world, and there's really not there's not the cross exchange, or cross margining prospects there, and it wouldn't it just doesn't seem like a logical fit at all.
Mm-hmm. Before we wrap up here, we do have some breaking news to throw into the mix. Chipotle earnings just came out, and the stock is off to the races. Yet again, the stock closed at $256. It's trading $276 in the after hours right now.
Oh, my God.
This is a name that was trading under $220 a couple of weeks ago. We were working offers on the 190 puts, and they were very close to coming in at like around $2, and then it turned off to the races. But this thing is just, talk about another volatile name. We're talking a lot about Apple, but Chipotle is right in there in the mix for names that are just all over the place these days.
Well, who doesn't love some Chipotle?
Rob, I hear you're a big Chipotle fan these days.
I am. My wife loves going there. She actually likes their little the pre-made margaritas there. They're pile drivers. You have two of them, and you pretty much don't know where you are. So we frequent the Chipotle pretty often.
This thing was trading $219 a week ago. It's trading $276 now in the after hours. This name is just unbelievable. It's one we've been trading pretty actively and watching quite a bit, and like I said, we missed our opportunity on those 190 puts, and now those things are just nowhere even in sight. It's amazing. So this is one that people who like to talk about Apple. This might be the new, not maybe the same potential as Apple, but definitely in terms of pure volatility and a volatile name to play, this is one to watch. All right, I think that's going to close it out for this extended but very interesting episode of the Option Block. I want to thank all of our hosts for coming on, including Jim, who had to leave earlier to go back to his senatorial duties in New Hampshire and
go hang out with his brother Lex.
Tucson, that's your client. You have to stick up for him there. You have to
yeah, come on now. I will say this, Sebastian, the dirty jokes were much more tame today. I appreciate you respecting the man of the cloth.
I did my best. Any dirty jokes?
I could tell you were struggling with that naked analogy. You wanted to go some other places, I think.
I was as clean as I possibly could be.
You wanted to work blue, but you held back against your baser instincts, and we salute you for it. And your reward for that is you get to go first in the plug round. What's coming up at Option Pit this?
Just this special that we've got going with the Option Insider. If you go to optionpit.com/events, our 5-part webinar series on a trader's guide to volatility is available, and at $249, it is already a ridiculously great deal. It is some of the best work I've done. Everybody that has taken this course about volatility has been really pleased with what they learned. And of course, if you use the coupon code OIVOL 2011, capital O, capital I, capital VOL 2011, we'll take 20% off that price, so they'll get it for $199.20. So that doesn't get much better than that. So that is our big plug. Aside from that, make sure you listen to the Option Block and send us questions. Call the line. I love talking. Mark likes talking to people. Mike likes talking to people. I like talking to people. Tim Navabi likes talking to people. We all love it. So send us some questions. Send us some emails. All right?
Yeah, we've been getting some good feedback on that forum there. A lot of it is some intricate, inside baseball stuff that's not appropriate for answering on the show, but it's still interesting to hear from people and their feedbacks and opinions. And, of course, that voicemail line Sebastian was referring to is 312-544-9356. And I keep forgetting to mention it at the top of the show, so one of you guys will have to remind me next time to plug it at the beginning.
And you know what? For our lucky 9th caller, all right, the 9th voicemail that we get, I will have a very, very special prize for them. And don't worry, it's going to be awesome. So to our 9th caller, okay, Mark knows how to tell that. I'm going to have a very special prize for you that I will announce next Monday. Next Monday.
Is it the slinky you've been playing with throughout the entire show?
It is not the slinky I've been playing.
Listeners, if you heard that Christmas jingling in the background, Mark is not riding on a sleigh. He is indeed playing with a slinky in his office as we speak. Uncle Mike Tusaw, what is going on over at Know Your Options, Inc.?
Well, tomorrow, because if we're broadcasting on Thursday, so I'm assuming you're listening on Friday, tomorrow, Saturday, February 12th, I will be speaking at the Options Express event at the Crowne Plaza Minneapolis Hotel. It's 5 minutes from the airport, so if you're in the Minneapolis area, stop on by. Love to see you and meet everybody that comes by. Sunday night, Monday night, we'll be having some webinars on the Greeks, so feel free to stop by our website, which I'll mention in a moment, to sign up for that. Sunday during the day, we'll be at the Monster Jam show at the Allstate Arena, just on a personal level. I figure I thought of this.
Are you going to go see Gravedigger?
I am. I thought of this. I'm officially a redneck now because a Jeff Foxworthy joke. You know you're a redneck when you have your kid's birthday at a monster truck show. So that's why I was thinking.
Gravedigger.
Yeah.
I love that.
It's good stuff.
You need to wear an option block T-shirt or something like that, and have people come up to you at the show. And people come up to you at the show, you can give out some little prize or something like that.
I like it.
They recognize you at the monster truck show. We'll see how big our fan base is in the monster truck arena.
If anyone recognizes me at the monster truck show, I will give some type of special prize. I don't know what, but if someone recognizes me there, you'll get some type of prize. So
he'll buy you a pretzel from the vendor stand. Fresh.
There we go. Done. We'll do that.
And Mr. K, what is going on these days in Options Express land?
Well, we're nearing the official launch of OX Social, which is it's kind of a social networking / way of traders to kind of communicate with each other, and in the same age of Twitters and Facebooks and LinkedIn. It's kind of similarly gives traders a little bit of a venue to kind of shoot ideas back and forth. Or so we don't have the official date. We're still testing that in house, but I think it's going to give. It gives us the ability to interact with our clients a little bit more as well. Some of us are going to be on there to show customers all-in-one trade ticket. That's coming very soon. Toward the tail end of the month, also or early March, we're expecting to do Espresso webinar. Espresso is our futures newsletter, and both Mike Sremski and myself are going to do a live version of that, and instead of covering one market, we're going to go hit up 7 or 8 markets at a time. So it's going to be a little bit a lot of exciting stuff going on next few weeks.
Yeah, from now on, I'm going to introduce you as the author of Espresso. I'll make this it'll just give you that extra bit of gravitas when you come on the show. The author, Mr. Kurzakowski. And, of course, our listeners who like the Espresso newsletter can find it on my website, theoptionsinsider.com. You can surf on over there for all sorts of fun stuff like Rob's newsletter or Mr. Sebastian's pithy thoughts on Apple volatility or the breaking news from the options market or the latest unusual activity, including all the stuff we didn't have time to get to today. And trust me, there was a lot. So that's going to do it for this episode of the Option Block. I want to thank all of our listeners for downloading and streaming and subscribing to our show and made it such a hit up there in the iTunes rankings. And we'll see you all next week. I'm getting someone needs to mute in the background there. I'm getting a lot of shuffling something. Is Tim on the show today?
That was me playing with a slinky.
Are you doing your impression of Tim today?
No, I've got a slink. I literally have a slinky here. Is that what you're hearing?
I heard like shuffling. I don't know.
Yeah,
I won't even ask why you have a slinky. Maybe we'll save that.
Well, I work in an office where they have a bunch of toys, and I saw a slinky, and I said, "Hey, can I have that slinky?" And they said yes, and so now I have a slinky.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.